Hi, my name is Jonathan Allen. This is Intro to Crypto Trading by Blockchain at Berkeley. All right, so the first section we really want to focus on is the familiarization phase. I really think that this is the most important step. So many individuals, like I said before, really read about this. They hear it from their friends, family, and they want to just dive right into it without really knowing anything. As with any topic, you should really educate yourself on the topic first before getting involved, especially when it involves money. So that's why this is kind of the initial step, and I think the most important. So I am going to mention, if you've been in the trading space at all, if you've kind of been involved, and if you've been reading it all, you probably heard a lot of these things, such as like some of the cliches that I use. But I really do think they are useful. To kind of be, have the validity in the space and to kind of like understand it, you really need to know the jargon. And a lot of that jargon is rather cliched at this point. But for the novice, I really do think that it's important to learn. The first and foremost is don't invest anything that you are not willing to lose. Crypto is extremely volatile and entirely speculative. So you just have to understand that if you wake up the next morning and a company is at zero and your entire investment is gone, that could actually happen. Much of this space is entirely unregulated. It really is kind of the Wild West, if you will. So you need to be sure that any money that you intend to invest, there is the possibility of a high upside and gain, and that's probably why a lot of individuals are here, because they've heard the vast amount of money people are making. But kind of on the flip side, there's also a significant amount of money that can be lost very quickly. So just be aware of that. Another kind of cliche is that the market can stay irrational much longer than you can stay solvent. So it's like just because you think the price is going to go up, at some point it has to go up. You'll kind of get out of your position. It doesn't necessarily have to. You could go to zero. You could have to pay your rent. You could have bills that come up before the price goes up on whatever you're invested in. That kind of ties into this maintained perspective. A lot of individuals have recently gotten involved in the crypto space in the last 2 to 3 months, and the only thing that they've kind of seen is a bull market, where the price continually goes up and up and up. If you wait long enough, that whatever coin that you purchase will go up and higher in price from what you bought it in. But that's not really entirely true. A lot of individuals who've been in the space for a long time can tell you, Bitcoin had a couple of year bear market where the price just kept dipping lower, lower, lower. So really maintain that perspective. Just because you previously had prices doing well does not mean that that's kind of a future indication of what's going to happen. All right. So now on to kind of the second part of familiarization phase. A lot of individuals use technical analysis. We're going to go into that a lot more in our advanced course. We really just kind of want to briefly touch on that. I also wanted to mention that in our advanced course, we're going to go into a lot more detail, whereas here it's just kind of a brief overview of the knowledge that you need to kind of be successful in this space. I'm going to give you a lot of links here, a lot of things that you can read. And this is basically going to be a consolidated version of kind of what I've learned in the last 4 years. But not necessarily all of the information I've learned, just kind of how I've gone about learning it. So that's the intention of this course, is to kind of give you those links, give you that resources and opportunities so that you can go ahead and learn it yourself. So the first and foremost is kind of that technical analysis. The definition is financial analysis that uses patterns in market data to identify trends and make predictions. TA is extremely important. You'll kind of hear these two sides of things where some people don't necessarily think that technical analysis is as relevant. They trade more on like kind of psychology and sentiment of the market. And then some other people say that no, sentiment, is just noise, where you really like need to follow these patterns, and that technical analysis is really kind of get you there. I think that most traders would agree that there's some kind of combination of the two, that markets aren't necessarily rational, that they have some sentimental and emotional aspects to it. So I think that's kind of important to understand. And we'll get into a little bit more about trading style and how you kind of want to mix or combine those two, based on your findings or kind of your understandings of the market. I really do recommend the site Baby Pips, a link below. You can click on it. It is intended for Forex trading, so obviously, don't take that as kind of gospel. Crypto markets are extremely different from Forex, and Forex extremely different from crypto. But I do think that it is a valuable resource when you're trying to learn basic things such as, how to read candles on a chart, or how to like read basic kind of just charting in general. So if you're kind of interested in that, interested in the technical analysis and just reading charts in general, I would highly recommend going to that site. And then as far as kind of how to learn to talk the talk, I post this link to TradingView, and it's actually like a chat on Bitcoin and cryptocurrencies in general. Let me preface this with that this is going to have a ton of noise. Anyone can join this chat and say whatever they want. So if you go in there and you see somebody saying that, some cryptocurrency is going to zero or some cryptocurrency is going to the moon, that is definitely not actionable trading advice. What I do think is interesting is if you kind of go on there and you read the comments and you kind of see what people are posting, it can be very interesting how quickly you can kind of learn things. One of the benefits to this site as well, from like a technical analysis perspective, is that a lot of people post charts. These aren't necessarily going to be great charts. You'll see some very, very bad charts. Until you kind of know like what is good and what is bad, it can be kind of confusing. But it is really a great place to kind of immerse yourself in this technical analysis, in this kind of trading talk, and just get like a lot of very motivated people who've been involved in this space for a while. But like I said, be very cognizant of who is making good calls, who are making bad calls, who kind of have a vested interest in a coin doing well, and who kind of are just trolling in general. So there are some individuals who kind of paid to access the platform. They have pro next to their name. Don't necessarily think that they are actually pros. The pro just simply means that they paid a monthly amount to kind of access to additional charting data or to be able to kind of like post more charts or some other features on that platform. So kind of be aware. It might be a way of identifying somebody who's kind of in it for the long haul, who's very serious about trading, but it does not mean that they are professional, and first, obviously it doesn't mean that they are right. So just be very aware of that. As you're on this platform and on this chat, you'll kind of see some individuals who make some very good calls, who are consistently good at trading, but realize that they are only correct until they're wrong. There's been some really good traders who are great at trading bull markets, but then when the market goes bear, when prices are going down, they don't really know how to trade that. So just kind of be cognizant that, you might be following somebody who makes a correct call for a month in a row, like 1 or 2 months in a row, but then after that, they can make some very poor calls. But in saying that, I think it is useful to follow some individuals who are kind of more educated and have more knowledge in the space, and then you can kind of grow your own understanding of the market and your own trading techniques from that. It's kind of the whole fake it until you make it mentality. You could have 2 or 3 individuals that you follow and kind of make a composite of your own that is like relates to your understanding of the market and that you think works best for your trading style. To continue on with this familiarization phase, if you're a kind of a programmer or anything technical, you kind of understand you need to set up your kind of dev environment. For this, it's like a trading environment. You really have to kind of set up the tools so that you can get the knowledge and information that you need, and just be very aware quickly of what's going on in the space. I recommend 2 applications just for when you're on the go to kind of continually be aware of what's happening with the price of crypto in general. The first one being CoinCap. It lists a bunch of different crypto caps by their market cap. We can go into that a little bit later on. But it's a great way of kind of getting to know what's going on, continually tracking your investments, and just kind of seeing the general movements. The second one is Blockfolio. I do want to preface this with the fact that I believe it was last week, it was kind of announced that they were monetizing users' data. So anything that you put in this app could maybe possibly be sold to a third party, which is concerning for a lot of people from a privacy standpoint, and that's definitely understandable. I personally don't necessarily use it for my exact numbers. I don't really have it attached to any identity. I don't have it attached to any real numbers, so I'm not overly concerned with it. But it is something to be aware of if you do choose to use it and you are concerned with the security aspect. That being said, I think it's kind of interesting that you could put your trades in, as you make them. I really do suggest, I know a lot of people don't necessarily like doing it, they want to dive right into it, but I kind of suggest paper trading just to kind of be aware of, you can kind of visualize the trade that you make and like the loss that you take or the gain that you make and see if you're kind of happy with your trading technique or if it works in general. Obviously that isn't really a prediction or a really good representation of how you're going to do in the future, but it is a good place to start to kind of have a dry run before you dive into it. And with Blockfolio, it's kind of interesting that you can track those trades, and it makes it very easy to say, I traded on this day, I sold this amount, I bought this amount, and it has a very nice representation of kind of like what the net gains or net losses are from that. In general, I think it's very important to kind of understand the market. There are a lot of things that you really have to be aware of, going into it. There are little kind of intricacies that are very important to know. There's just definitely some common rules that you kind of want to be aware of. Like a few of them, like why are alts often following the price of Bitcoin? And we can get into that a little bit later, but it kind of goes into the fact that most of them are represented by Bitcoin. They don't have a USD pairing, so the price isn't represented in USD. So when Bitcoin price falls, so does the altcoin price, because altcoins are represented by the Bitcoin price, if that makes sense. But we are going to get into that a little bit later, and we dive into that really deeply in the advanced course. And then as far as like what times large movements happen, that's kind of really important. We have a few links that we can send out that are basically like future settlements, or like when China wakes up or when some other countries wake up, or they're kind of prime time for trading. So it's kind of important to be aware of those. What is going to be a catalyst for a large price movement? You don't want to be in a position and then at 2 or 4 a.m. All the price action is happening. I know a lot of traders who have almost reversed hours because, in the past, China has led a lot of these price movements. So it's been very important to kind of be awake at night or like set alarms, or just kind of be able to kind of participate in whatever price action happens late at night. All right, now that we've briefly touched on the familiarization phase, a few of the jargon, cliches, and things that you should know before getting started, that leads us to our third section, which is in fact getting started, which is probably what most of you are here for and kind of interested in if you are new to the space. Like I said before, this is a massive barrier to entry that usually stops most individuals. A lot of people that I've talked to are interested in getting started. They try to sign up for one exchange, they try to purchase some Bitcoin or Ethereum, something doesn't get verified, they run into an issue, and they just kind of give up. There's a lot of confusion in this space, there's kind of a lot of barriers to entry, and that really is a problem. So we're going to kind of address some of those concerns, give you the best on-ramps and kind of the best way of being successful and just generally getting started. I really do recommend that individuals start getting started and like signing up sooner rather than later. I know a lot of people who, when the price is going up extremely quickly, they decide that now is the time that they want to buy in. A lot of these exchanges require like a lot of bank requirements, like know your customer and anti-money laundering requirements, and they have to be compliant with those. And that requires a lot of kind of formal verification and submission of documents and manual reviewing. And you really don't want to be going through that process when 40, 50, 60,000 other people are trying to do it at the same time. I know one individual who, in this most recent run-up a couple of weeks ago, tried to kind of apply for one of the exchanges, and I think it was recently, maybe a day ago, that he actually got approved for the platform. So don't be that individual. Kind of plan ahead and kind of prepare yourself for when you want to make that investment, when you want to start actively trading. And like I said before, it's usually kind of necessary to buy Bitcoin or Ethereum before trading on some of these other exchanges. I'm going to go into that a little bit more in these next slides, but this is kind of just a general on-ramp, a brief overview of the exchanges that you might want to be interested in using, and that you can use to kind of make a plan to figure out what would be the best ones for you to sign up for, depending on what you're interested in doing. I also wanted to point out that you should be aware that a lot of these exchanges are going to require your social security number, a picture of your ID or your passport, and even sometimes a picture of you holding your ID next to your face. It seems fairly invasive, but there are, like I said, a lot of compliance issues around it, and kind of a lot of issues with them, making sure that they're on the up and up with whatever regulating body they kind of fall under. So just be aware that this is kind of normal. It definitely is invasive. So I want to kind of preface that with the fact that you should not be sending a copy of your passport or your social security number to some random exchange that you found online. Especially when you first start out, I would recommend staying with some more of the, not necessarily legitimate, but kind of like more well-established and well-known, possibly even US-based or one that kind of based in your country, in case you run into some issues. It will just make that much easier to kind of interface with them and kind of deal with any issues that might arise. I think that security in this space is really paramount. It's something that you should absolutely be focused on. If you're on an exchange and it's not necessarily the best security, that really is an issue. That's kind of how I decide a lot on what exchanges I use. If you've been in the space for a while, then you're kind of aware that a lot of hacks have happened, that there have been a lot of issues with security, and you really don't want to kind of end up in that boat. So one of the things I highly recommend for everyone is to enable two-factor authentication. I think that this is a very valuable security. It's kind of the standard in the industry. I really recommend not using SMS two-factor authentication. I know a lot of even banks kind of use it, but there are a lot of ways of kind of circumventing that. You can kind of spoof a phone number and kind of get around that through some social engineering. So I would use something like Authy or Google Authenticator. Authy had some issues kind of with that spoofing as well and some other things that I won't go into, but they have since then fixed that with their default settings. So I think those are two kind of good ones that you should use, and that's kind of what you should stick with. So be sure to activate that on any exchange that you use. I also want to address the fact that if you're not holding your keys, you don't necessarily own anything. If you're not kind of familiar, a lot of cryptocurrencies, you'll rely on this two-key cryptography, where you kind of have your public key, which is the address you can send coins to, and then you have a private key, which is kind of like the ability to unlock that safe, the ability to send those coins to whoever you want. If somebody possesses that key, that private key, they have access and control over your coins. A lot of people like exchanges because you can have 6, 7, 8 different cryptocurrencies and not have to handle all those keys. They really abstract that away from you and handle that all internally, which is very nice from like kind of an ease of use standpoint. But, you have to realize that you are delegating that trust to the exchange. So like I said, again, just be very cognizant of what the exchange's level of security is, what your level of trust is in that exchange. Like if they get hacked and lose all of their money, how are you going to deal with that? Is that something that you can necessarily expect? No. There are some companies that seem like they're taking security a lot more seriously. So just be aware of that when you're kind of shopping around. Like I said before, there's things like Mt. Gox and Bitfinex. Probably research those because it was where there were security issues with major exchanges. So a lot of individuals will recommend that you don't necessarily hold any more than you have to on an exchange and kind of hold those keys yourself. But like I said, it is a trade-off. If you're not as technical, you might feel more comfortable with an exchange holding the keys than you are. Just be aware that that is that trade-off between a centralized body holding your keys, which makes a large honeypot. This kind of incentivizes hackers. If they are able to break their security or social engineer around it, they can make a lot of money. So something to be aware of. So I'm going to briefly cover kind of safe storage practices because it kind of goes hand in hand with the security that I talked about. The exact process is different for every coin. Some coins have very similar kind of storage practices and wallet setups that you can use. A few of the examples, kind of being Ethereum, and on top of that there are ERC20 tokens, which have been a lot of the most recent ICOs. So you can actually store those on the same kind of Ethereum address as you store your Ethereum. I will get more into that, more in depth to what all that means, the different kinds of tokens in the advanced class. Just not really relevant covering that necessarily here. But I do think that it's kind of important discussing hardware wallets. These are basically like tiny little devices that you can use like sign your transactions with that private key, which basically transfers them. But it doesn't actually expose your private key to the internet. You could use it on kind of the worst computer imaginable with infinite malware and wouldn't have to worry about anybody being able to swipe or kind of steal your private keys. So Trezor and Ledger are kind of two of the leaders in this hardware wallet space. There are a few others, so definitely look into that. I highly recommend using one of those or some different ones if you have a significant amount of money invested. It might kind of give you a little more peace of mind if you have things stored on that. That being said, you can't necessarily use it with all of the altcoins or all the cryptocurrencies because they haven't updated the software to support those. But for like Bitcoin, Ethereum, Litecoin, a lot of those kind of coins, they do have support. So just be aware of that. I do briefly mention cold storage here. It basically means that your private keys have been generated and stored in a secure offline environment. Like I said before, anytime your private key touches a device that has access to the internet, that kind of leaves you susceptible and open for someone viewing those keys and thus stealing your token or whatever is kind of controlled or owned by that. So that is another means of kind of securing it, where you can generate and store that key and then send those coins to that wallet without kind of fear that anyone has access and can take your crypto. All right, on for the next section. We're going to start covering some of the exchanges that you can use. Not necessarily going to cover all of the exchanges, but I tend to cover the ones that are most simple to use, kind of have the easiest UI. As this is an intro to crypto trading, I'm not going to be covering some of the advanced features, such as margin trading or stop limits or like any of those kind of more advanced features. In the advanced course, we will be covering that more advanced kind of trading techniques. But what we really want to focus on here is just kind of the buying, the selling, and just getting people onboarded and kind of access to crypto. So the first one that I'm going to be starting with is Coinbase. This is the one that I would kind of recommend to my grandparents. It's very easy to use, very easy to sign up. If you read some reviews, there have been some individuals who have issues kind of signing up. Those 40, 50, 60,000 individuals trying to sign up all at once. A lot of those numbers are from Coinbase, because it is the most visible. It kind of is one of the more established exchanges in the space. They have a significant amount of traffic. So if you go on, if you register, if you try to kind of verify your identity and it takes a long time, that can be an issue. Just know that going forward. I do think that it's kind of important to mention that they have like a base rate of 4% for all transactions, but you'll kind of see a different effective rate in these slides. And, if you're purchasing from a U.S. bank account, they charge 1.5%. If you're using a credit or debit card, it can be that full almost 4%. And then when you're actually selling your crypto, they're going to be charging you that 1.5% if you send it to a bank account. And then if you want to send it to a PayPal account, it's going to be that 4% as well. So as you'll see in these next few exchanges, those rates are fairly expensive depending on what you're trying to do. The kind of interesting thing about Coinbase, though, is that you can instantly purchase with a U.S. bank account attached. The only issue is that they'll normally wait anywhere from like 3, 5 to 7 days to credit that purchase into your account. But it can be beneficial depending on what you're trying to do. Say Bitcoin price is at 2,200, you think that it's going to be 2,600 5 days from now. You can lock in that rate and not necessarily have to have that USD transferred to the exchange. You can lock in the rate, and then you have to wait 5 to 7 days in order to start actively trading or kind of sell that crypto. That does mean that you are locked in at that price for 5 to 7 days, however, and if the price goes down, or if it dips significantly, there's not really much you can do other than wait. But that can be kind of beneficial if you don't have money loaded up on an account and you want to purchase immediately, and you're kind of comfortable waiting that 5 to 7 days. That leads me on to my next exchange, which is GDAX. A lot of individuals don't really know, but GDAX is run, controlled, operated by Coinbase. Whereas you can kind of think of the Coinbase is kind of the first iteration where you can go on, you can just purchase easily Bitcoin, Ethereum, Litecoin. GDAX is really kind of their exchange. This is where a lot of the trading happens. They really do try to funnel more of the active traders and kind of like the large trading volumes onto that. And you can really see that represented in the prices and purchasing. I heard a story before where one individual was on Coinbase, and they had Bitcoin, but they wanted to purchase Ethereum. So they ended up selling Bitcoin for USD, and then they took that USD and bought Ethereum, and they paid 1.5% on each side. And I just that made me cringe a little bit. It was very unfortunate, because what they could have done is switched over to GDAX. I think all you have to do is kind of enable it on your account. It's the same login almost it's the same login for your Coinbase as well as your GDAX. You can instant transfer any Bitcoin, Ethereum, Litecoin that you have on Coinbase over to GDAX for free because their backends are linked. So it's very easy to switch over, and you can see kind of mentioned here that their fees are anywhere from 0.1% to 0.25% for Bitcoin books and 0.1 to 0.3% for ETH books. So that trade actually could have been made so much cheaper. You can actually go on the exchange directly from Bitcoin to ETH or ETH to Bitcoin without kind of having that USD or fiat intermediary. They do have a maker-taker fee structure. I'm not going to cover that as in depth, but just know that if there is something that is posted, say you want to somebody posts kind of some Bitcoin that they want to sell, and you want to buy that, you would be the taker. If you actually post a deal that someone doesn't get matched with immediately, then you are a maker. You're kind of making that market and allowing individuals to kind of take that. So we can get into that a little bit more in the advanced trading course, how to kind of minimize your costs, especially if you're doing some more high frequency trading or more active trading, because it can add up when you're doing large volumes. But for the average beginning trader, not really that big of a deal. If you are interested, though, kind of look up maker-taker fee structure, because that is going to be mentioned a couple times on these next exchanges. It is fairly popular way of doing fees. Like I said before, it does have that instant transfer from Coinbase to GDAX. I think what is kind of also an interesting tip, I use this quite frequently, it's very useful to me, is that they don't charge you for crypto withdrawals. If I'm trying to send Bitcoin from my GDAX account to someone else or to another wallet, I can do that completely free. Normally you're having to pay, anywhere from that, $1, $2, $3 to send a Bitcoin transaction. When you send it from GDAX, it's completely free. They kind of cover that for you. I don't necessarily know if that's going to sustain itself forever, but it is very useful, if you want to avoid those fees. Even on Ethereum, it's very convenient. If you're trying to sell Bitcoin and want to save that $1 or $2, it's a nice feature that a lot of people don't know about. The next exchange is Gemini. It's kind of the exchange by the Winklevoss twins. You can look them up. They're very involved in kind of the ETF. If you've been active in trading, you probably have heard all about that. Not really covered within the scope of this course, however, but is an interesting thing to look into the background of the exchanges you're going to be using. They do have, again, these maker-taker fees. They are dynamic, kind of based on volume and kind of the distribution around what's like for sale and what is like the bid and ask side. So don't necessarily have to dive too deep into that, but again, it's usually around 0.2% for the taker, and then as a maker, you can kind of receive a 0.15% rebate. So for high volume, for large volume, it can be really beneficial. Since the beginning, this was kind of established as the exchange for institutional investors. So it does kind of benefit people who use like higher volume, but there are some very interesting features just for the average individual if you're kind of doing a medium, medium to large size purchase or sell. I think what's really interesting about it is that you can do same-day wire transfers. If you send it by 3 p.m. Eastern, 12 p.m. Pacific, they will credit your wire transfer that same day, which is really nice. If you see the market's going crazy and you really want to get in, you can make that wire transfer and have it there the same day. What's also very cool is that you can do same-day purchases with ACH, with bank transfers. The thing about it is that you have to wait 4 to 5 days before withdrawing. What's nice about this, though, is that you can kind of hit that purchase button and have access to your Bitcoin, your ETH, whatever it be, to start actively trading on that. The only, like I said, the hang-up is that you have to wait that 4 to 5 days before withdrawing, because, of course, they have to wait for the money to actually get there. And that's approximately how long it takes for your bank to actually transfer the money to Gemini. So those are some interesting features. Like I said before, depending on your situation, depending on what you want to get in, it might make sense for you to open, a Coinbase and a Gemini account, just so you're kind of prepared for whatever comes next or whatever your situation is. So those two exchanges are kind of the main ones that I recommend as far as buying Bitcoin and Ethereum. You can connect them to your bank accounts, which is extremely convenient. If you have a credit card, if you have a debit card, if you have a bank account, you can easily purchase those. You might have to wait a little bit of time, you might have to deal with some hoops, but you can go about and doing that. This next exchange, however, does not have any USD whatsoever. It deals entirely in cryptocurrency. So those two exchanges I mentioned before are not going to have a lot of these altcoins. They're not going to have the Ripples, they're not going to have the IOTA, they're not going to have a lot of the coins that you might be interested in purchasing. But what you can do is go to something like Poloniex, which is my next slide. But in order to do that, you kind of need an investment vehicle in crypto already. You need that value in order to purchase these tokens. So that's why I kind of briefly mentioned before. Usually the on-ramp is that you purchase Bitcoin or Ethereum, then you can transfer it to these next two exchanges that I'm going to mention, and then you can start buying altcoins. So I'm starting with Poloniex. They have their own personal maker-taker fee rate. You can kind of look that up. Like I said before, there's no USD pairings. You can't transfer USD there. You can't sell for USD and kind of retain it there. What they do have actually is a USD tether, which is a cryptocurrency that is pegged to the value of $1 US. Like anything that's kind of pegged, if you're kind of familiar with basic economics or any of the pegging value, it is kind of a challenge to peg anything to a rate, if it's not that kind of a large of a pool. So you will see some slight fluctuation. It might be worth slightly less than $1, slightly more, and that's based on kind of the supply demand in the marketplace. How many people are trying to cash out, into USD Tether, or how many people are just not using it, and there's a huge surplus. And like I said before, you can only transfer crypto in and out. I think something to be very cognizant of for all of these exchanges that I mentioned briefly here is that there are limits for transferring in and out. A lot of people get very surprised, when they go onto Poloniex, they buy some altcoins, make some great gains, and they had maybe like $2,000-3,000 there before, but now they have $5,000 to $10,000, and they go to transfer it out and realize that they can only transfer out $2,000 per day until they get verified further. So this can really be a challenge for some people. Don't be kind of stuck in that position where it's going to be taking you a week or two to get your money out of Poloniex. That's a very uncomfortable position, kind of being stuck and not being able to access your money. So definitely be aware of what your verification level is, what you need to do to up that verification level, and if you're going to need to do that based on how much you plan on investing or how active of a trader you need to be. Like I said before, you want to do that before rather than later. If everyone's trying to do that, then they're going to be inundated, and it can take weeks, even months. A lot of these exchanges' customer services aren't that great. It might not necessarily not be that they're not trying, but like I said, they're just so inundated. They're so small. A lot of them are like startups, very, very low overhead. So customer service isn't really necessarily what they're focusing on. It's more the tech and security, which is probably what you want them to be focused on, but not when you have an issue that needs to be addressed. So again, be aware of those limits, check it out, see what's on your account, see what you need to do to raise them, and go about doing that if you need to. The second one that I'm going to talk about that is, again, no USD, it's just crypto only, but you can buy a lot of alts on, is Bitrex. It's 0.25% for both buys and sells. It's a very simple flat rate. It doesn't really have that maker taker system. It could be slightly more expensive depending on what you're doing. So just be aware of that. Like I said in the advanced course, we're going to be covering that, when that really matters, how you can set it up to kind of best save yourself that money depending on your trading style. Again, before, like I said, is no USD or fiat withdrawals. It's only crypto. So you're going to have to jump on one of those exchanges to kind of convert your USD to Bitcoin or Ethereum, then transfer to here. It is a little bit complicated, but hopefully by now you kind of understand that process and why it takes some people so long to kind of get involved. I would like to kind of point out that a lot of the hurdles are in getting that USD, getting that fiat into crypto. Once you're in crypto, things are extremely quick. If you buy a significant amount of Ethereum, I can transfer it almost anywhere else unless the market's completely inundated, 15 to 30 seconds. So it's a very quick transfer, and then you can immediately almost, once it has enough verification, or enough confirmations rather on exchange, you can start actively trading that. So it is kind of a pain to get into crypto, but once you're there, it's a lot easier. So just be aware of that. You might deal with some of these hurdles initially, but once you get it all figured out, it is a lot smoother sailing. So don't get overwhelmed. Kind of don't get beat down. Like you can definitely do it. Like I said before, USD Tether, Bitrex has this as well. If people want to cash out because they're concerned about what the cryptocurrency market is doing, they can kind of be held in something that roughly mirrors the value of a US dollar. I am going to kind of point out that Bitrex is slightly smaller. They generally do have less trading volume. So if you're trying to trade large amounts of altcoins, Poloniex might be slightly better for you, although Bitrex is significantly picking up in volume. And I do think that a lot of that is because it has slightly less downtime than Poloniex recently. Some of that is because a lot of individuals think that Poloniex expanded a little bit too quickly. They tend to, in the past, they've adopted some of the altcoins a lot faster. They've added support to them a lot faster, whereas Bitrex has been slightly more reserved. So there's that kind of trade-off of like volume and usage versus downtime. So just be aware with all the exchanges that you use, none of them is really perfect. There's no real true market leader. They're just some like more well-established and like usable exchanges. But they do have trade-offs. If you have a ton of people logging on, the site might be crashing. Coinbase is kind of notorious for this. During large movements or price movements, everyone will be trying to log on, and the site will just crash, and you won't have access to it. So just be cognizant of that. If something goes wrong, you need to be kind of aware that what will happen if you don't have access to your account. In the trading class, we will also kind of address that, how to kind of put limits, kind of how to set yourself up for the worst case scenario so you don't lose your money. There are some ways that you can go about doing that to kind of best protect yourself and your investment during those kind of apocalyptic times. So definitely follow us there if you're interested in doing that. Like I said before, I'm not going to cover all of the exchanges. You can look out there. There's Bitstamp is another large one, Bitfinex, OKCoin, Kraken, and Yunbi are just a few. There are a ton out there. There are some a lot more small kind of boutique exchanges out there. Just like I said, be very aware, like if you're going to be sending your kind of personal information on there, if you're going to be sending a significant amount of money, be sure to kind of do your research. Also in the crypto space in general, if it's kind of too good to be true, be aware that it probably is. Just like anything, we have to be very cognizant of scams, you have to be very cognizant of security, and you definitely want to kind of protect your money. In crypto, it's so easy to kind of, take your account, get access to it, transfer your coins somewhere, and you never really see them again. It's not necessarily like a lot of banks or credit cards. Like if you get scammed, you kind of have recourse. They can get your funds back. They can do a lot of different things. With crypto, a lot of times if it's gone, it's gone. It's kind of a double-edged sword of being able to control your keys and own things, and not have anyone have access or freeze them. You also have no recourse if anything goes wrong. So just be aware of that going forward. All right, now to kind of finish off the more active getting started portion of this lecture, I'm going to go into arbitrage. It's been kind of a lot of requests. A lot of individuals I've kind of talked to, bringing them into crypto, getting them interested in crypto trading. It seems to come up more often than not. It is a little like more technical topic, but I do think it's relevant because it seems to come up entirely. When you have access to all these global markets, you need to be aware that different exchanges are going to have different exchange rates between different cryptos. So you can kind of like see an example of, say that Bitcoin in the United States is kind of denominated in US dollar. Say that equivalent is around $2,200, $2,300. If you go to a Japanese exchange or a Chinese exchange and you convert their local currency using kind of the prevalent Forex exchange rate, you'll see that it's like maybe a $2,500, $2,600 USD equivalent. A lot of people get very excited about that. They have access to all these exchanges. You can go ahead and sign up for OKCoin. You can sign up for Yunbi. A lot of people think that they can make tons of money kind of doing this arbitrage. But what they don't realize is that when you cash out, how are you going to get that money back? So that is kind of a problem. I know some individuals have made a significant amount of money. There was a huge arbitrage opportunity with some of the Indian exchanges a couple of months ago. I had a friend who had an Indian bank account and a US bank account, and he was basically able to buy Bitcoin, transfer it to an Indian exchange, sell it, transfer that from his Indian bank account to his US one, and then about every 3 to 5 days, he was able to kind of do that cycle and make quite a bit of money until the price kind of equalized out from other individuals doing that like him to kind of even out the prices between different continents. That being said, if you don't have a bank account in that country, if you don't have a way of getting it back, you can kind of get trapped there. Like I said, you could always kind of buy back into Bitcoin and transfer it out, but that really defeats the purpose, especially if there's some exchange fees, especially if you're waiting. If there's prices a little bit volatile, it evens out more, you can end up losing money. So just be aware that just because you see this arbitrage opportunity, kind of be aware of why that arbitrage opportunity exists. A few examples of that are, it's just basically supply and demand that can cause a lot of that. China, I think, is a very good example. A lot of their exchanges are much higher when you're converting RMB to USD, but that's because of the difficulty of transferring fiat currency out of their country. A lot of people are buying it, willing to buy it at a higher rate, so they have that flexibility of transferring that crypto anywhere in the world that they want to. So they're kind of able to buy it at that higher rate just to get it out. They're kind of willing to take that loss. What's also interesting about that is that there isn't necessarily the exchange rate that's publicly posted is kind of reflective of the confidence in the national currency in China. With the yuan devaluation, a lot of individuals don't necessarily think that exchange rate is going to persist, in the next week, month, year. So they don't necessarily see that as an accurate representation of the value. So they're willing to kind of, spend their yuan at a higher rate to get it into some other investment vehicle, or just in general get it out of the country. You can also see an exchange like Bitfinex. They actually have some legal issues where they actually had a lawsuit against Wells Fargo. And because of that, all of their kind of USD withdrawals from the exchange back into the States were frozen. That really caused problems, with people being able to get USD out of the exchange. So people didn't want to transfer it in because they really weren't sure when they were going to be able to transfer it out. So because of that, there was this huge squeeze on the USD availability, and a lot of issues that arose from that. So you saw these like price discrepancies kind of arise from they're being able to transfer crypto in and out, but not USD out. So like I said, those are just a few examples. We really do dive down deep into these arbitrage opportunities, how to best spot them, and how to take advantage of them in the advanced course. But as far as this brief overview, just kind of be aware of that. Be aware of how difficult it is to get on the exchange, how difficult it is to kind of get liquidity in and out of that exchange. And then the reasons for those price opportunities. You can take advantage of them if you're on the ball and you're set up correctly, but you can also put yourself in not so great of a situation. And just kind of wrap up this section, I think what's most important is that you need to make a plan. I think that many people struggle with trading because they just generally don't have a plan. You really kind of need to have your entries, you need to have your exits, you need to kind of know what profit level you're going to be happy with, and you really need to know when you're going to cut your losses. You need to kind of be aware of the greed that kind of happens when you start making extreme gains, and the kind of emotional state after you made a good trade. I know I personally, if I made a very good trade, I'm very happy. I kind of take a little bit of time off. It could be a day, it could be 2 days, depending on how good the trade was. But I know that I continue to kind of keep chasing those gains. If I think I'm able to, double, triple my money, why can't I do it again? So I'll kind of be chasing that, and I won't be happy with a 20 or 30% profit. I'll kind of keep chasing that, and because of that, I tend to lose money after the fact. So it all comes down to kind of familiarity, just getting to know yourself, getting to know your trade. You really need to trade in a non-emotional way. Some individuals are very emotional, and that's just generally not how you should be looking at things. You should be kind of like analyzing them on a psychological level, on a fundamental level, on a technical level, but you shouldn't be emotional when you're kind of viewing that. Kind of another cliche that I think is important for everyone to know is that no one ever goes poor from taking profits. It's kind of this old adage that people always say, but it's saying, if you're getting 20-30% gains and you actually cash out and take those profits, those are 20-30% gains. Compared to a lot of the other major indexes, that's really good. You need to maintain perspective, like I said. If you're kind of comparing it to conventional markets, that could be amazing. But just don't get greedy, and all of a sudden your 20-30% gain can turn into a 20-30% loss very quickly. So just kind of go into it with a plan, go into it knowing where you're going to kind of exit, and you have to base that on something. Like I mentioned before, there are a lot of different trading techniques. Some are based on technical analysis entirely. Some are based on kind of market sentiment. Some are based on kind of psychological levels and psychological sentiment in general. So a lot of people combine a lot of those together. We are going to go through it in the advanced course in depth, different trading techniques and styles, and kind of expose you to what those look like and how you can utilize them and access them to the best of your capability. But just to go over this course, we're going to basically kind of expose you to those terms, topics. You can do some research on your own and kind of see what would work best for you. Like I said before, the biggest thing is to kind of know yourself. You really need to get familiar with how you're trading. You need to get familiar with how you trade after a good or a bad trade. And that's why I kind of suggest, necessarily paper trading is good, but you can't really learn that until you have some skin in the game. Some people get extremely emotional when they're trading for actual money. It could be a small amount, it could be a large amount, but paper trading might not help you learn that. So that's something we're also going to cover in the advanced course, how to go about best doing that, how to go about best learning yourself without losing a significant amount of money. A lot of people who got into crypto trading had to lose a lot to kind of gain a lot. It's kind of the price that you have to pay for that experience, but hopefully we can kind of consolidate that into as short and efficient period as possible. So you don't necessarily have to do that. So you can kind of learn your lessons from people who have been in this space for a significant amount of time. Alright, this next section we're going to be covering is education and research. I think that this is personally the most important section. This is where you're going to be learning all the information. This is where you're going to be immersing yourself in a lot of info and communities and kind of finding out what's going on and kind of finding the pulse of the crypto market. And it's going to be a lot of the information that's going to be influencing your trades going forward. So to start off, knowledge is definitely power in this space. That's kind of a very cliche statement again, but it really is kind of fundamental to this marketplace. I know a lot of individuals who are kind of cozy with certain teams. They have inside information. They're kind of helping with ICO or a particular platform, and you really get actionable information from the individuals that you know. And it is very, very beneficial to know what's going on in the market before it happens. It's kind of a wild west there. There are almost no laws or regulations once you are in crypto. Like I said, inside information is not inside, it's just information in general. There's no rule against it. It's a completely unregulated market. So if you have inside information, this is actionable information that can make you a significant amount of money. I kind of addressed this briefly before, but I think it's worth reiterating that there's no right or wrong method. But you do need a method in trading. A lot of people kind of go in haphazardly. They're not really sure, what they want to do. They just want to throw some money in. They want to make a ton of money. They're not really sure what that kind of number is, what a ton of money, what kind of enough is, or what they'll be happy with. So it's kind of important that you go into it knowing that. That being said, we're going to go over a lot of the places where you can find information, where you can kind of base your trading techniques, your styles, your entries, your exits. And it's going to be a lot of information. I know that every day I spend a significant amount of time going over all of this information. In the advanced course, we are going to go over a lot more details and specifics. We're going to walk you through a lot of that information. It's going to be very consolidated and it's kind of sifted into bite-sized pieces. That being said, that's kind of the advanced portion. That's if you don't have a ton of time. That's if you want to get a real quick crash course and you want to get into it and you want to get up to a high level very quickly. We don't really think it's necessarily in a space. A lot of us here, we've gotten into trading. We've kind of learned the hard way. We've spent tons of hours, tons of time sifting through this information and kind of came up with this combination of all our trading techniques and best practices for finding this information. So it is possible to do it on your own. This intro course, what we really want to focus on is, like I said, giving you all of these resources that you need, giving you all of these links, giving you all these kind of platforms, all of these ways of getting this disseminated information so that you can create your own trading techniques, so that you can make profitable trades. But it really does take a lot of work and effort. So know that going into this, unless you're kind of signing up for something that you're kind of paying for someone to digest this information for you, be prepared to spend a significant amount of time. Attention to detail is really necessary to kind of do well in this marketplace, just because of the fast-paced nature of it. And like at the end, I just really want to say that it's really important that you immerse yourself in some kind of community. You really have to be kind of on the ball with these things. Things change so quickly. You could be looking at an ICO and all of a sudden they change the way that you have to kind of send the money. They change the platform that they're going to be accepting certain crypto for their raise from. Something bad could happen, that you hear through a Telegram or a Slack chat before the actual market hears it. And you being able to either buy that crypto or sell that crypto could mean the difference between 10, 20, 30, 50% losses or gains. So just being immersed, being accessible, knowing where to find that information, and having a community that can help digest that information for you so you don't have to read everything. Because it really is not possible for you to read everything or to be everywhere at once. So finding that kind of community wherever it may be. I'm going to offer a few suggestions for platforms that may be beneficial for you. Take them for what they are. I'll kind of give you, the cost benefit, kind of the benefits, the detriments of each platform, and you'll kind of see what works best for you. What's the easiest place for you to kind of gain that knowledge required. The first one that I'm going to start with is Reddit. A lot of the information in the early days kind of started here. That being said, there is a ton of noise. There's so many different posts. There's so many different comments. You really have no way of kind of knowing who knows what they're talking about. But it can offer valuable insights. A lot of people like Reddit because people can upvote, downvote. So it's depending on upvotes and downvotes, or depending on how the sorting is, you can kind of see some of this information rise to the top. That being said, you really have to be aware of each subreddit's bias. It can kind of be a challenge. I think a really good example is Reddit Bitcoin versus Reddit BTC. Not going to get into too much of the drama. We are in the advanced course going to talk about some of the scaling drama, some of the actual fundamental issues, or some of the fundamental changes or roadmaps of some of these large cryptos such as Bitcoin, which is very relevant at this moment. A lot going on that I think is important to cover. Definitely look up the scaling debate if you don't take the advanced course, because it's going to be very important in the coming months for the price of crypto in general, especially Bitcoin. But that being said, there's Bitcoin and then BTC subreddits, and each of them have this very kind of dug in, belief of how they think it should solve some problems in Bitcoin's kind of protocol. But in that, you kind of get, some of them have censoring, some of them upvote and downvote only things that they agree with. There's a lot of infighting, and you kind of create this echo chamber. So like any community, it's kind of created of a composite of all of its members. So just be very cognizant of what those members are and kind of what the bias or what that echo chamber is kind of perpetuating when you go there. I also think that it's interesting. Most major coins and even ICOs will often have their own subreddits. So if you don't have a ton of time, I think it's great if you just bookmark. You have one of the ICO subreddits, or you have a major coin subreddit, and you can kind of check that every 1 or 2 days. It's not going to be the most efficient manner. Like I said, it's also going to be noisy. It might also be slightly biased. But anything kind of major in the space, anything major happening with that coin or ICO, will probably be at the top of the subreddit. So that's definitely a valuable place to get information kind of quickly, get the broad strokes, if you will. The next one I'm going to discuss is Bitcoin Talk. This is a very, very old platform. This is where a lot of crypto history was kind of made. That being said, it is kind of an old style forum setting. Like I said on the slide, it's probably the least efficient method for collecting information that I'm going to present to you today. There's just so much noise because it is that forum style. You can go to a popular post and it can have hundreds and hundreds of comments, and you just have to sift through them, and so many of them are just very, very, very much worthless. They're really not valuable. But in those, a lot of times you can have these deep discussions with these developers. You can kind of see these hashing out some issues, asking questions, kind of getting them addressed by the community at large. And it really is a very active community, a very knowledgeable community as well. So that could be beneficial if you have the time to sift through that. That being said, a lot of people don't have time to kind of read through hundreds and hundreds of pages of information. So as far as sourcing, actual actionable information, it might not be efficient or your best choice. But I do think what is interesting is that almost all ICOs and kind of like new protocols and coins and all of that are often announced on Bitcoin Talk. So if you're kind of looking to get in the ground floor on something new, if you want to make a very speculative investment, if you want to stay abreast of what's coming next, a lot of times that can be a great resource for you. You can go to alternate crypto and then kind of the subcategories of discussion or announcements. Announcements especially, a lot of people will kind of announce that they're going to be creating a coin or kind of discuss new and up and coming coins. So if you sift through there, it could be some valuable insights and you can get some early information on kind of what is coming next. The next platform I'm going to discuss is Slack. A lot of the community has shifted to Slack. It just really is kind of an efficient means of communicating. There's different channels. You can kind of go on there. Everyone kind of can communicate. It really is like a messenger. It's kind of compartmentalized into different sections. Most have kind of announcements, general. Some of them have more like a protocol level discussion. Some will have more developer centric. So depending on how kind of organized their Slack is, it can be a great place to kind of find these sub communities depending on what you're interested in for that coin. A lot of them are, have very active communities. Some of them, if you get in early, will only have 50, 100 members. Some have thousands. So it really depends on what you're looking for. The challenge of that is that most of these Slacks, they don't want to pay for the full version of it. So most of them have a 10,000 message limit. That being said, if you have 4,000 or 5,000 members, you can see how quickly that kind of cycles. And then what happens with those messages is they just are not accessible. So if you're looking to kind of scroll through a channel and just read back months and months and months and see discussion on that platform, it's just really not possible. So as far as archiving and finding all that information and going back in the past, it's not that great. What I do like about it is a lot of announcements will be made from there. They'll be made on the Slack channels, and you can kind of see that very quickly. A lot of times that'll be the first place that it goes out. Even before Twitter, oftentimes, which I'll be discussing shortly. But it is a really great place to kind of get very quick information. And I think for the most important thing is that it's a great place to get involved in the community. I think what I love about it so much is that you can really start talking to the core devs. You can talk to the founders. Most people are extremely accessible on there. A lot of people might have a long turnaround time depending on how busy they are, how close they are to launch, what's going on. But it's just really been amazing, the fact that I've been able to join some of these ICOs, I've been able to join some of these newer coins, and just have these long, in-depth discussions about the platform with the people who actually wrote the code. The accessibility, I think, is really everything. That being said, I think there's something to kind of pay attention to is that so much of crypto is so community-centric. If you really engage yourself in the community, if you're involved, if you're kind of talking, actively trying to learn about that, it's very easy to notice. I've been very interested in a few coins, gotten involved, kind of reached out to the founders, actually had discussions. When new people came in, I helped them out, helped them with basic issues that I had learned and kind of paid it forward, all the information they'd given me. And then later on, I get a PM saying, hey, this is going on, or this is about to happen, or, maybe do you want to help us with some research on the platform? And then, possibly you could get a pre-sale allotment. So it is such a small, tight-knit community that a lot of individuals for these new platforms really appreciate you helping. So if you get involved, you might see that maybe you get some inside information. Maybe you kind of learn things before other people do. Just kind of getting in cozy with the founders, getting in cozy with the people making decisions is definitely a good idea if you think it's a very cool project. That being said, I'm not telling you to kind of go in and just play the game to get information and just kind of do that. But I think the biggest thing here is that you should really get involved in these communities that you're passionate about, and it can pay dividends. It can be rewarding. Even if it's not necessarily on trading advice, getting involved in something in the ground up is a huge opportunity in crypto, and a lot of passionate people have done that. Last, I said join Blockchain at Berkeley Slack. We are a pretty growing community. I think we have almost 800 individuals on our Slack. We are going to be making a separate Slack just for this course, actually. So we're going to put the link at the end of it. There's going to be a short quiz you can fill out, get your email. We're going to send you an invite. For those individuals who choose to take the advanced course, we are going to have a few separate private Slack channels in there that have much quicker response time, a lot more help. because obviously those individuals might be slightly more involved in the trading process than somebody who just kind of has a cursory interest and wants to take a brief intro class. So if you're interested in that, I highly suggest it. We will be sending those invites out, so be sure to fill that out and join the community. Kind of lastly, we're going to go over Twitter and Telegram. So as the market has kind of progressed from Bitcoin talk, general forums, to kind of more Slack, where it's instant discussion and private messages, Twitter and Telegram have very much taken off as well. I think it's kind of worth mentioning that Telegram, a lot of communities that have been using Slack have started to move to Telegram, just because there are some issues with the paid Slacks and kind of the growing communities. So there are a lot of valuable Telegram communities out there that are popping up. If you get involved in the space, sometimes you'll meet people, you'll get invites. That's another reason why you should be involved in the community. It's because if you're actively trading, if somebody likes your trading technique, or just generally likes you as an individual, sometimes you'll get invited to these channels and find some very valuable information. You'll find kind of a trading community that kind of fosters that engagement and that communication between each other, and it can be really beneficial. Like I said, being able to have multiple brains, multiple eyes kind of on this content can be really valuable than kind of doing it alone. Twitter, I think, is a really excellent resource to stay on top of news. It's a good way of aggregating content, not having to read through pages and pages and pages. It's little bite-sized tweets. If you kind of follow many traders, industry professionals, and news outlets, they deliver some really great content in a really easily accessible and kind of maintainable way. We actually have this link on our Twitter with one of the individuals who's helping with this, Clay, kind of consolidated on his account, and you can go through and kind of add all those individuals. We think it's a really good kind of aggregate of, like we mentioned before, those industry professionals, traders, and news outlets. So it's a great base to kind of get you started. Let me preface it with saying that it doesn't necessarily mean they know what they're talking about. It doesn't necessarily mean that we condone what they say, or kind of what their trading techniques, their styles, or their general understandings of technicals or anything else other than that. But we do think it's a good aggregate to kind of get your Twitter kind of going with all of that information. So you can definitely add all of those different resources, see what you think about them, and maybe see that some of them agree with your trading technique more so than others. So it's definitely a good starting place, and you can definitely add more people who you can relate to. Alright, now that we've covered some of the platforms and the communities that you should really immerse yourself in to get information, a good place to kind of base your knowledge and confidence on these platforms, protocols, and coins, now it's really time to focus on the information that you should be seeking when you're going into these communities. First and foremost is that you should really get comfortable reading white papers. If you haven't heard this term before, it's a semi-technical document that really gives you kind of a general walkthrough of what the team's intentions are, kind of their ideas on how to technically implement it, a lot of the security around it, and a lot of other factors. You should be able to search the platform with white paper, and it should pop up. It should be on their website in a fairly prominent place, and if you can't find it, that's kind of a red flag. That should be something that's fairly disconcerting. A lot of teams I've noticed recently have been really rushing into the market. They see these ICOs, they see a lot of money being spent, and they really don't want to miss out. So they'll come to the market with just simply an idea, with a dream, and they'll be looking for people to invest in it. A lot of these sound very attractive, but if they don't really have a technical basis or a means of implementing it, that might not necessarily be a good investment. You're really investing on kind of a gamble, even more so than the normal crypto market. So like I said, you definitely want to look for those white papers. A lot of people get easily overwhelmed because they look at these white papers, there's tons of math and statistics and cryptography, and it can really be kind of overwhelming and very difficult to get through. And I don't, when I say you need to get comfortable reading white papers, mean that you need to understand everything that you read in them. I think this is where it's really beneficial finding these Slack, Reddit, and Bitcoin Talk communities, is because you can really leverage the knowledge of other people on those platforms to kind of fill in the gaps of your own knowledge. You can kind of read through and see if it's a unique value proposition, if you think it's an interesting idea, and then kind of go to these communities to really reaffirm kind of if they know what they're talking about, if they seem legitimate, if they've solved some of these technical problems. It's really valuable. Like, you have to sift through a lot of the noise, because obviously in these communities you can't trust anyone, but you can usually get a general idea, of what people's opinions of them are, and if they do solve some of these issues, or if they have some very glaring security issues that would make you, a little less likely to invest. I know I mentioned the term ICO quite a bit. I'm going to be covering that in the next section, so don't worry. It stands for Initial Coin Offering, and what it basically does is it allows you access to some of these very early companies that you might not necessarily have access to. It really puts you in the realm of a venture capitalist or an angel investor or someone who deals with these very early companies. And if you're in this realm, you need to start doing the level of due diligence that they normally do. You see these large valuations because people want to get on the ground floor of these things, and they're willing to kind of throw money into ideas, into a gamble. But that might not necessarily be something that's lasting. A lot of people have said this is a bubble, that is very speculative, that it's not really sustainable. We will cover that in our advanced lesson. If you're kind of interested in these general walkthroughs and these checklists and these ways of kind of doing fundamental and technical analysis of ICOs to see if they're lasting, if you want kind of a general walkthrough to see if it should be a short, medium, or long-term play, that's all covered in our advanced content. It's in a very easily digestible way that you can kind of follow and apply to any of these platforms, protocols, ICOs in the future to get a very good understanding of kind of what the investment should look like and how you should move forward with it. But for the scope of this course, we're just going to mention some things that we think are very important, so people can best protect themselves when they're investing. Some considerations to make when you're looking at things. The second thing that I'm going to mention is the roadmap. Roadmap is generally most developers, most teams, when they come up with a product, they have what they want to get launched by the time they actually release. But then they also have goals that they want to meet at certain milestones. These can be very important to know. Just like any company, if they set these milestones, if they have these goals, most of them will be Q3, Q4, 2017. Some of them will be more specific and say end of June. If they are hitting those, that can be very reaffirming that the team knows what they're doing. That they're able to project kind of the requirements for them to develop, and that they're able to execute on a timely manner. So I think that paying attention to these is very important, especially for coins that have already launched. If the team is able to kind of execute, if they're kind of maintaining and not pushing and delaying, it should kind of instill this sense of confidence, in the team going forward. They might not be able to execute the end goal, but it is kind of representative that they've planned things out, that some thought's gone into it. So that's one thing to consider. It also can often be a catalyst for a pump. So just be very aware if you're necessarily a holding or you're thinking of kind of buying into a coin that has a roadmap kind of milestone coming. If they're able to actually execute on that and achieve it and launch on time, it can be very good for the price. If they have to delay it and push it, it can be kind of a negative for the price. So just be aware of that milestones and roadmaps when you're investing in certain coins. I think one of the most important things currently is researching the team and advisors. As I mentioned before, you're getting in the realm of kind of venture capital, pre-startup, very early companies. So you want to be very cognizant of the team and advisors. Lots of venture capitalists and angel investors say that you're kind of investing in the team. You're not necessarily investing in the idea. Obviously it needs to be a unique, novel idea if you kind of want to support it. But a lot of times they'll kind of present something, and by the end they've had to pivot quite a bit, and so the end product will not really necessarily look anything like what they originally started with. So be aware of that. If they have a strong team and advisors, they're probably going to make it to the finish line. It's not really guaranteed that their product is going to look anything like what you necessarily thought it would, but you need to that they have a strong team and advisors who can carry on. If things fall apart, if they run into an issue and they don't have that strong team, things can quickly go from bad to worse, and then your investment can kind of go sour. So it's stay very cognizant of the team and advisors around it, and when you're investing. I think the biggest thing that I really focus on is there unique value to kind of this proposal? Is it new and novel? There are some things that are very much needed in the space, that there are some copycats, some people who do it slightly better, but I think that it's very fundamental to kind of understanding, if there's value in something by seeing what it does. I generally think to it do I see a need in the marketplace? Do I think that there's going to be demand for it? And that's kind of a good way of just, when you briefly start looking into something, just looking at the idea and then looking at the overall marketplace and seeing if it makes sense to you. And that kind of goes into my next slide. I think a really good walkthrough, we actually do this in the advanced course for you. So if you don't want to kind of take the time, if you want it very easily digestible, you can just look at that, and we very quickly kind of spell that out. But we basically take the time walking through the top 20 market cap cryptocurrencies, and we ask a bunch of questions, and it's just kind of familiarizing yourself with the space. The questions like, what makes them successful? What's their unique value proposition? Like, are the price movements often correlated between certain coins? A good example is Bitcoin and Litecoin. We cover more of that. Like I mentioned before, kind of that scaling drama is very important, and a lot of that can be kind of based on that sentiment or that general kind of like psychological issue kind of between those two coins who are competing. I think like how the coins were distributed, what is the inflation rate or the number of tokens, is it capped or uncapped? Does the company hold a large stake? Something kind of interesting covered is like Ripple, who had a large amount held by the founders, and they had large issues with that until they locked up 80% of their tokens, which instilled a lot of confidence in the community, and resolved a lot of those issues. So we cover those very in depth. We go through the top 20 market cap. I do think that it is extremely important to do something like that when you're first getting into the space, because it really gives you this fundamental basis of knowledge in which to base your new analysis off of new and up and coming coins. It might not necessarily be representative of future success, but you can kind of take what has made a coin successful and what has made a coin not successful, and kind of compare that and see the difference in teams and the difference in value proposition, the difference in market need. That being said, I definitely want to kind of clarify. Some of them might be hyped. A lot of the coins that we cover in the top 20, maybe they don't necessarily deserve the market cap that they do. Maybe they have the market cap for some more complex reasons. We definitely cover that as well. So don't think just because they have a large market cap that necessarily makes them any better or worse. It's just a factor to really consider, and I think a good basis and starting point is that top 20. I'm showing here a quick screenshot of CoinCap that I mentioned in the beginning. I think it's really important to kind of go over. A lot of people tend to not necessarily see this, especially if they're very new to trading, the difference in market cap and share price. If you look at Bitcoin, the price per Bitcoin is $2,544, and the market cap is $41.7 billion, whereas Ethereum is $311, but the market cap is almost $29 billion. And a lot of people don't fundamentally understand that. They look at Ethereum and they're saying, why would I buy a Bitcoin that's $2,500 when I could buy Ethereum for $300? It's like I could buy 8 Ethereum for the price of 1 Bitcoin. But you really have to look at market cap. If there are more Ethereum in circulation, there's almost 93 million as opposed to 16.4 million Bitcoin. It's not going to be that quick for Ethereum to kind of surpass Bitcoin in price, because that would mean a significantly larger market cap, a significantly larger capital investment to get it there. So I think that's definitely something we cover in depth and in the advanced course. Just kind of that fundamental analysis of all of these different prices, but it's definitely a consideration. Just because you see Ripple at 26 cents, don't think that, hey, I think that it's better than Bitcoin. It's going to go from 26 cents to $2,500. So just be aware of that going forward when you're looking at these prices, and don't get hyper focused on share price. I've noticed that that's a mistake that tons of people do, especially when they start trading. Alright, in this section we're covering ICOs. This stands for initial coin offerings. We briefly mentioned it in the last section, but I think it's a very important section that we want to pay a lot of attention to. A lot of you are probably here because of an ICO. They've been making the news a lot. There's been these huge capital raises. A lot of people are kind of acutely aware that this might be a huge transition into a new way of funding companies, and we definitely want to spend a lot of time kind of addressing it and kind of clearing up any of the misinformation or kind of confusion surrounding it. Like I said, initial coin offering, it's a very interesting evolution of crowdfunding. You can kind of think of it like a Kickstarter for startups. What you'll have is you'll have a company who will issue tokens, and then they will sell a predefined amount of those to whoever wants to basically support them or their platform, and then they will take that fund and then they use it to fund their development or whatever they plan to do with that project. This is kind of an interesting way of doing it, because most venture capitalists or angel investors, they'll invest $1 million, $2, $3 million into a company, and what ends up happening is they don't really have liquidity until the company either gets bought out or until they go public, and which that can normally be a fairly long road. Not always true. There are some ways that they can kind of get money out, but it's a kind of a long, arduous process, much more complicated. With ICOs, as soon as this coin is listed on an exchange and tradable, you have that immediate liquidity. That's why so many people are so interested in this, is if you get into an ICO early, you can make, in a week to 2, 3, 5x returns. That is kind of changing. That's something that we're going to be addressing, kind of the reasons why. Some do well, some do exceedingly well, some do not so well. I think there is kind of like this change in the marketplace currently. It goes into kind of that due diligence and that lasting, is this a bubble? Kind of, is this a good investment? That we go into a lot more in the advanced course. But that liquidity factor is very interesting and something you should kind of understand about this ICO movement and why there's so much discussion about it. Another thing that's great is that you get this immediate consumer interest. Normally you'll have 2 to 3 people, maybe a group who are investing in your company, and then you have to go build these marketplaces. So many of these projects are community driven and they kind of need consumer adoption to be successful. ICOs, you get that immediate buy-in from the individual. If somebody has a stake, has some skin in the game, then they're going to kind of like really go out and they're going to want to preach the platform. They're going to share it with their friends, because if it's successful, then they have basically an economic incentive to make it successful, because they will also be successful as well, being a token holder and having kind of a shared interest in that company. Like I said before, these are opportunities that were once only available to angels and VCs, but now it's kind of available to the masses. And I think that's why you have this large influx of individuals investing, and why you have these crazy valuations. Is normally, there's only a few people investing into it. They're very particular in who they invest into. They have a lot of due diligence, and now you have this kind of global market who just doesn't want to miss out on the next Google, who doesn't want to miss out on the next Apple. There's so much hype around this technology, but not a lot of understanding, and that is the main key of this course. We really want to clear up a lot of that. We want to help people get educated in this space, make kind of their best decision making that they can, and move forward in this space with a better understanding of it. So some ICO considerations. A lot of issues come with it because it isn't just as easy as being say hey, this is kind of the Kickstarter of crowdfunding. There's a lot of legal ramifications. If you're familiar with any of them, a lot of them come down to accredited investors. They don't want anyone to be able to invest into these, especially speculative assets, into these companies that might not necessarily be good investments. So that is kind of this legal hurdle, this legal gray area that we're currently dealing with. I think it is important to say that most of these tokens don't represent anything. I'll talk about it a little bit more in the next slide, but kind of, there's like the Howey test and the securities regulation, like far in the past, they kind of dealt with this, what defines a security. But basically, if a token is kind of represented as an underlying value or represents any underlying asset, then it's technically a security. And there's lots of hoops that have to be jumped through before you can kind of issue and trade and sell the security. So most companies are kind of, dancing around that and, hand-waving around those requirements by saying that the token is not actually worth anything. So knowing that fact, you have to think that it's basically entirely driven by supply-demand. It's basically a token that is based off of a company, but it really has no vested interest in that company's success, or failure. You want to, I think the first thing on the checklist, that should be very apparent to everybody, is that if an ICO is capped or uncapped, it's often the single most important factor when investing. You can think of it like if a company is trying to raise $20 million and there's $50 million in demand, they are going to basically sell that $20 million to investors, and then when the token is tradable, that additional $30 million in demand is going to try to buy it at an exchange. So you have a better chance of making a profit. If the ICO is uncapped, the converse is kind of true. We'll discuss that a little bit later in the next slide. I would generally say that you should try to get in early. This isn't necessarily the best way of going about doing that, however. I'll talk about that in a second, but as far as pre-sales, it basically gives you a guaranteed purchase. A lot of ICOs recently have been a huge trouble for people to get into because they've been dealing with the Ethereum network, and so you have a ton of people all trying to get into a finite amount of space, and it really is a struggle. You're basically massively DDoSing this system that wasn't ever intended for this many people spamming it all at once. So it's not necessarily the best outlet for all of this demand before the scaling issues are kind of resolved. But with a pre-sale, it's usually done through like a fairly centralized way. I'll talk about some of the few companies, Bitcoin Suite and then also ICOH. There's a bunch of different companies that kind of handle this, and if you put your information in, if you kind of have an allotment, you can be guaranteed that you will get whatever money you sent them without having to deal with waiting in line, without having to deal with crowds, without having to try to spam the network to make sure that you get in before everyone else. That being said, there has been some issues with some ICOs kind of changing their terms, changing things after the fact. Maybe it was capped, maybe it was uncapped, and they've changed that after people's pre-sale has already gone in. So just be cognizant of that. Like, if you are going to be buying in a pre-sale, make sure that you've done your research, your due diligence, that you kind of believe in the team, that they're going to do what's right. Because if they change it afterwards, it's going to be very difficult to kind of have any remediation or deal with any of those issues going forward. Another thing is that a lot of these ICOs, to just get around the legal issue, they don't want to deal with it at all for the United States with the securities issues that I mentioned before. So they'll say that it's not available to anyone in the United States. That being said, a lot of people were like, hey, I'm just in crypto. Nobody's really checking. A lot of companies aren't doing their due diligence, and it's like, I can send Ethereum to that company and invest, and it's not really a big deal. No one's checking. But what does happen is, say that company ends up scamming you or something ends up going wrong, you really have no recourse because you shouldn't have been participating in that ICO anyway. So just be aware of that. There's a lot of gray area. There's a lot of ways, like workarounds for the legal requirements, but those kind of legal requirements are in place for a reason. And I do think that the SEC or some other governing body is probably going to step in fairly soon. So just be aware of kind of how that progresses. The most important thing, I think, is stay current with how to buy in. This space is so quickly evolving, especially because it's so new. I talked about some of the network congestion issues. A lot of companies wanted to do it just through the Ethereum network, but they realized that there was just too much demand and that not everyone could get in. It wasn't the most efficient way of doing that. So a lot of companies had these planned ICOs, and they completely changed their plan to try to resolve some of these issues. A good example is Amisco. They were only taking pre-sale orders through Bitcoin Suite, and then the day before, I believe, the ICO, they ended up saying, oh, we're also going through ICOH, and it was on their Slack. So it's like, unless you got that announcement, you really had no way of knowing that. So you just have to stay very aware, because Bitcoin Suite was very much impacted. It was entirely sold out. I think they had $64 million of demand for $4 million of pre-sale allotment. But some individuals were able to get in through ICOH just because they were aware of what was going on in Slack. So like I said, just really try to immerse yourself in these communities, stay aware of where they're going, and brief changes, because it could really financially benefit you. Like I said before, I'm going to go over just a few examples of ICO issues. Not going to necessarily say that it's good or bad, it's just something to be kind of aware of, and a few examples that I want to highlight. As far as EOS, you can look into it a little bit more, but it kind of explicitly states, in their contract, that EOS tokens have no rights, uses, or attributes. A lot of people were extremely upset about this. They were calling it a scam. They were saying it was ridiculous. Why would you invest in something that has no value? But like I said before, if you look at almost every other ICO, they don't really even have any utility on the platform. They really are completely useless with no rights, uses, or attributes. And like I said before, that is by design. It's so that it isn't an unlicensed security, and so they can kind of skirt that law and have that crowd raise. They kind of equate these tokens to just an API call. It's really valueless. How could you regulate that? Which I think is going to be an issue going forward, but currently it does work. So just be aware that if somebody's calling scam into the market, be very aware of that. But the crypto market is one of the quickest communities to kind of say scam and echo scam. So just be aware of who's calling it out, and do a little research into why. There are a lot of scams. Be very wary, but then also don't kind of get caught up in the hype of what everyone's saying if it's not doesn't really have any basis for being true. Tezos, it just had a 2-week uncapped ICO and raised $232 million. Not really commenting on the technical analysis of it. We actually go into that a lot in the advanced course. But what I will mention is that if you have a 2-week uncapped ICO and it raises that much money, where is the demand going to be for it when it launches on exchange initially? So that's just something to think about, right? If you're in it for a short-term play, if you want to dump it in a month and you want to double, triple, quadruple your money like everyone else is trying to do, but everyone is able to get in who wants to, there's not going to be a ton of buy side when it releases. In fact, it might dump, it might even out, but basically any kind of gain in the long term is going to be basically that long term, and it's going to be entirely based off of execution of the team. So if you fundamentally believe that Tezos is going to be the next Ethereum, it's going to be the next Bitcoin, it's a great time to get in. It's if you think it's interesting, if you think it's new, novel, and necessary in the space, definitely feel free to invest in something like that. But just be aware that it would probably be a long-term play, something like that. The short to medium term might not be that great as far as an ROI. Another example is going to be Bancor. They ended up raising $153 million. It was probably one of the most hyped ICOs, second probably only to Tezos this year. One of the more interesting things was, if you kind of read through, it basically said that it was capped. They had a hard cap set, but that it couldn't hit any of those caps for 1 hour. So it was basically a 1 hour uncapped ICO. And then what happened is, when it started, they had some network issues. They said they were being DDoSed, and they ended up changing that 1 hour to three hours because they wanted to make sure everyone got in. So rather than having that hard cap at $100 million, they ended up raising $153 million. And then rather than having it be a 1 hour uncapped, they ended up changing it to 3 hour uncapped. So just be aware of that. If there's tons of demand, how they're kind of having their ICO go about, and kind of the issues that can take place after that. Just because there is so much going on, so many changes that can be made at the last minute, and just be aware of why are you investing in this. If it's for a quick flip, something like this could happen, where they change the cap, and then there's a lot of people trying to get in, so it might not be that great of a play going forward. Some positive things that I've seen in the ICO space, I think that there are just tons of growing pains, because I don't think anyone really expected this level of demand. I'm just going to kind of discuss some of the positive things that I've seen in the space so far. Civic, I won't necessarily mention any of the things that are kind of happening currently. I know that there's a lot of stuff going on if you research. Don't really want to focus on that. I just kind of want to focus on their initial ICO. It had a cap of $33 million. They raised a majority of that during pre-sales, and then they mentioned that they would be able to refund a certain amount. I'm not going to delve into the details of that. But then they also had an actual ICO crowd sale. And what they did is they required the use of their app. So they're an identity company, blockchain identity company. And so they had people install the app and actually verify their identity, and they had to do that to participate in the ICO. I really like that because, one, it just gets the buy-in. It already gets that kind of, individuals onto their app and actually using it and engaging in the community through this crowd sale, which is what I think is so interesting about ICOs in general, is just building that community, kind of getting that consumer buy-in immediately. And I think they did a really good job of going about and doing that. And then when it came time to actually purchase, and be into the ICO, you basically confirmed your information. They had a very novel new security requirement where you had to kind of turn a bird right side up, so that bots couldn't really pre-program for that. It was generally unknown before. And then you confirmed your identity, and then it gave you a random assignment in line. So say even if you had 1,000 accounts, you weren't guaranteed to be the first 1,000. Say you had a bot set up, you couldn't set anything up like that. So I think they did a very good job of trying to make it as fair as possible, and not just letting large whales kind of accumulate all of the coins initially, which is the biggest thing right now. Most of these ICO companies, most of these crypto companies really want a community. They want people with skin in the game. So you'll see this kind of iterations and changes and evolutions of ICOs to better have that happen, rather than 8 to 10 people who kind of accumulate all of the coins. And I thought it was very interesting how Civic kind of addressed it. It'll be interesting to see how ICOs do in the future. Omisco, they ended up raising $19 million entirely through a pre-sale. They didn't even do an ICO. Some people were a little resentful through that. Some people weren't very happy about it. But I think given the current climate, where there were so many issues, where there's so many problems with these ICOs, there was so much, issues with using Ethereum to crowdfund things. I think it was kind of a very interesting decision, and I think that it ended up going well. It went kind of as smoothly as possible. I also think that it was capped at $19 million, and it was a relatively small raise, for the space. It's all in perspective. That it was a reasonable kind of ask. I do tend to use the rule of around $30 to $50 million is kind of the max of a reasonable ask that you'd want to kind of see at a startup in this space. Obviously that's still kind of an absurd valuation, But kind of, in the research that I've done, much more than that, you really can't responsibly spend. You shouldn't see these ICOs kind of asking for much more than that, where it just kind of gets greedy. Now, obviously, that's not a hard set rule. There are some projects in the space that require more capital raised. There are some that can utilize that in a responsible way. But it comes down to, if they lock that in, if they have a release on a milestone basis, if they have some kind of incentive to continue working. There's a lot of kind of considerations that need to be made when you're analyzing these big raised companies. We go into that very much in depth. There's a huge section of ICOs in the advanced course because that is such an emphasis in the market currently. But just in general, kind of think of that, how much money does a company need to do what they need to do, and does it make sense for the roadmap that they're kind of talking about or discussing, or that you see in their white paper? All right, the last section that we're going to cover is tax implications. I've noticed that a lot of people who get into the crypto space are usually young, aren't very kind of investment savvy, haven't really dealt with a lot of these issues before. So I'm just going to very briefly go over it. Obviously, this is a section that you can spend hours and hours and hours discussing. So I highly recommend you do your own research going forward. But I think it is kind of important to do a brief cursory overview to just make you kind of aware of the considerations that you need to make and some of the research you need to do for your own personal situation. You really just need to be aware that when you cash out, you're responsible for capital gains. I'll never forget, one of my friends did pretty well in the crypto marketplace. He cashed out, and then I was like, how much tax is he going to pay? What is your tax requirement off of that gain? And he informed me that he didn't have to pay taxes because it was in Bitcoin. That's a little concerning, that's not true at all, in case you were wondering. You are responsible for those capital gains if you make a gain. You can also have capital losses if you have a significant amount of loss, so that can kind of offset some of your gains. So just be aware that you need to kind of educate yourself about the tax requirements and implications of what you're doing. A lot of people also don't realize that when you're trading, like say Bitcoin for Ethereum, that is a taxable event. You are responsible for capital gains at that sale price. Capital gains, capital losses, depending on kind of what the exchange rate is, based on when you bought the Bitcoin and based on what rate you sold that Bitcoin at to purchase that Ethereum. This can make some extremely complicated tax situations. I know one individual, he's a pretty avid trader. He had a 175-page tax return this year. It took a lot for him to go through. He keeps amazing records, but I'm pretty sure he's going to get audited because that's a significant amount of paperwork, and they're going to kind of want to know what he's doing. So in general, don't let this kind of be a barrier to entry. It is kind of this huge gray area, but just kind of keep as detailed a log as possible. They can kind of audit you for your tax returns up to 10 years previous. So you really need to keep those records. Try to make them, like I said, as detailed as possible. It may seem like a pain right now, but there's many things going on in the space right now, such as the IRS kind of requiring Coinbase to give them information to help with audits. So it only seems like a matter of time before they have the infrastructure and the expertise to conduct these audits. So definitely be prepared for that. There are other things as well to kind of consider. It sounds kind of ridiculous, but places like Nevada and Puerto Rico have a lot better, capital gains rules and regulations around it. So if you make significant gains, that might be something to consider. Don't be one of those individuals who's trying to market sell, $40 million of Ethereum on Coinbase and losing a significant amount of money doing that. It's a good problem to have, but just kind of a ridiculous example to kind of show you that you really need to be aware. A lot of individuals are young, they're kind of new to this, making a lot of money, and they're happy because of that. But do the best research that you can, educate yourself on your personal situation, and try to make sure that you really understand the tax implications and how to best set yourself up for the future. And that's generally all I'm going to cover. Obviously we can go more into depth than that. Feel free to shoot out questions, do your own research. Taxes get very complicated, but kind of knowing that, doing the research, this should give you a solid basis to kind of do your own research for your personal situation. All right, you made it through. Congrats. We're just going to go over a brief summary. I know that was a lot of information, so we're really just going to hit the high points here to kind of, drive in, kind of all the things that you've learned. The first and foremost, kind of familiarize yourself with the space before investing any money. You might want to make a few paper trades before diving in head first. Just kind of familiarize yourself with the space before investing money. This might be a serious decision. You might be investing a little or a lot, but just make sure that you kind of have some knowledge, before diving in. Not just kind of hearsay from your friends. That you try to educate yourself as best as possible. Like I said before, it's so cliche, everyone says it in the industry, but it's really, really necessary to kind of drive home. Don't invest more than you are willing to lose. Profits are far from guaranteed. Just because people are making a ton of money right now doesn't mean that you're going to do that. You could lose a significant amount of money very quickly in this space, so be aware of that. It's very speculative. It's almost on the same level as kind of gambling for a lot of these investments. I really want to iterate, please stay away from margin trading. I didn't even cover it in this lecture. I really hate even mentioning it, but I think that I need to kind of, discuss it, because a lot of people get drawn in, if I'm making gains on kind of just normal longs or shorts, I can make so much more on margin trading. For those of you who don't know, it basically kind of allows you to multiply your position, but what it also allows you to do is lose all of your money that much quicker. You can make 4x as many gains, but you also kind of lose all your money 4 times as quickly. So it could be very good, it can be very bad, and it just kind of emphasizes that risk in an already kind of volatile marketplace. I see tons of posts every day. I have friends who've been playing around with it, and they've gotten burned before. So please don't be one of those individuals. We talk about that more in the advanced trading for different trading techniques. Some individuals might want to do that for certain reasons, but definitely not when you first start. It's not necessarily something that's necessary. So just be very wary about that. I also say follow competent traders and then kind of mimic their style, or you can even combine several styles together to kind of create one that works for you. You just kind of have to realize that you're very new to this space. Try to take in as much information as possible, and it always is helpful. It's just like in sports or like any other kind of space that you get into. If you follow the individuals who are very good at it, who've been very involved in it, you can tend to pick up what they do and kind of infer the things that they have learned through those kind of actions that they're making. So that's what I would highly suggest. I've listed a bunch of different communities of a bunch of different people who have been involved in the space, and I'd highly suggest kind of taking it all in, just really trying to immerse yourself so that you can learn as much as possible and make as few mistakes as possible. Some of them you have to make for yourself, but really try to minimize that by taking advice from individuals who've been doing this a long time. I would say sign up for exchanges sooner rather than later. Be wary of keeping too much on exchange and some smaller, shadier exchanges. And again, just going to re-emphasize that security is everything in this space. Things are moving so quickly. It's so easy to lose your money on exchanges, or if the security isn't kind of emphasized. So always be aware of where your coins are held. Do you trust that exchange? Is it kind of a centralized way of storing it? Are you storing your coins securely by yourself? That's definitely something you want to educate yourself on. Read some more. I read every day. That's one of the reasons I'm so passionate about this space is, I like to kind of master something to the 80-90% level and then kind of learn something new. Every day there's something that I just have no idea about in this space. It just continually keeps me interested. That being said, it can be overwhelming for people who don't necessarily like that style of kind of learning or kind of being involved in something like that. So you need to read, and I would definitely say get involved in a community if you don't necessarily like reading. If you're not able to kind of spend hours and hours a day trading or kind of educating yourself on trades, I'd highly recommend kind of having a community that's able to synthesize a lot of that to kind of feed you the high points. And then that kind of ties into find a way to get better information. I highly recommend joining our Slack channel. We'll send you an invite. We're trying to grow a really great robust trading community there. I think it's a great way to kind of disseminate information, and hopefully we have a great community there. We're going to be highly involved and active in answering questions there, and really try to get that going. And then, like I said at the end, it's not the best, most fun topic to talk about, but you need to be wary of the tax liability incurred. You need to set yourself up to be safe, so you don't have long-term ramifications. I thank you so much for sitting through this course. Hopefully it was educational. Feel free to give me comments, suggestions on how I can improve it. As far as the advanced course, like I said, everything is out there. A lot of this stuff is open source. You can kind of trudge through it. We tried to give you the links and the resources that you need to kind of find out all this information, but we are aware that the space is so fast-paced and there's so much going on that a lot of people with full-time jobs or so much going on in their lives really don't have the time or want to put the effort into it. but they do kind of want to get exposed to the crypto community, and they do want to get exposed to cryptocurrencies. So if that kind of sounds like you, if you're too busy, if you're kind of interested in it, but don't necessarily think that synthesizing all this information and spending hours a day is for you, I would highly recommend joining our advanced trading class. We do like to tell individuals that we're not going to tell you how to trade. We're not going to give you kind of actionable advice. We're not going to just be like a newsletter that's, hey, pump this, dump this, buy this at this price point, sell this at this price point. We really just focus on the analysis. We have several different things that we focus on, but it's really the educational aspect of it. Us being an academic, nonprofit institution, we really want to focus on like finding the truth. So if that's something that you're interested in, if you want to, necessarily join some of those clubs that are going to tell you how to trade your account, this one isn't for you. But if you're really focused on kind of understanding it and setting yourself up as best as possible to kind of know what's going on and then trade based on that information, and have someone kind of synthesize what's going on currently in the market, this might be a great group for you. So thanks so much for sitting through this course. Hope to see you in the advanced course and then the trading channels that we set aside in Slack.